The opening bell rings at 9:30 a.m. Eastern Standard Time, but smart money, we get there early. Welcome to Beat the Bell, the podcast that demystifies what's happening in the market before it impacts your wallet. I'm Dominique Broadway, self-made first-generation multimillionaire, and after helping over 600,000 people build wealth, especially those who are the first in their family to do it, I'm here to translate the financial noise into clarity you can actually use. Whether you're just starting your wealth journey or you're ready to level up, this is where we beat the bell together. Welcome back, Money Family. It is Monday, October the 13th, and we have got a lot to unpack this week. So if you thought the government shutdown was the only drama in the markets, well, think again. President Trump just dropped a tariff bomb that's going to hit consumers' wallets starting tomorrow, and earnings season is about to kick into high gear with the big banks reporting on Tuesday, Wednesday, Thursday, and Friday. Plus, we're still dealing with that government shutdown now in week 3, and the economic data blackout continues. So let's break down what's happening, what it means for your money, and how to position yourself this week. All right, let's start with the biggest news. Tomorrow, October the 14th, a whole new batch of tariffs are supposed to go into effect. And these tariffs are going to be felt in some very specific industries. First, we have lumber and wood products. So a 10% tariff on softwood, timber, and lumber. So if you're planning any home renovations or building projects, prices are about to go up. Home builders are already warning that this could slow down new construction and make repairs a lot more expensive. Canada is getting hit especially hard here since they're actually our largest wood supplier. So they were already facing duties of 35%. So this just adds on top of it. Next, we have the furniture industry. So this is the big one, y'all. Starting tomorrow, we're seeing 25% tariffs on kitchen cabinets, bathroom vanities, and upholstered furniture, and it gets worse. Those rates jump even higher on January 1st. So upholstered furniture goes to 30%, and cabinets and vanities jump to 50%. So Trump said this is to help bring back furniture manufacturing to North Carolina, which lost a lot of jobs to China over the years. But in the short term, if you're planning a kitchen remodel or if you need new furniture, you're about to pay a whole lot more. So here's the bigger picture. Last Thursday, October the 10th, Trump announced an additional 100% tariff on Chinese goods starting November 1st. This is retaliation for China tightening export controls on rare earth minerals, which China controls about 70% of the global supply. So rare earths are critical for everything from smartphones to electric vehicles to military equipment. So this is escalating pretty fast. China called it typical U.S. double standards, and you can bet they're planning their own countermeasures. So if you're planning to buy furniture, renovate your kitchen or bathroom, or do any home improvement projects, do it now before tomorrow. Not sure how much time you have, but try to do it now. Prices are going up and retailers haven't fully passed along those costs just yet. So for investors, keep an eye on home improvement stocks like Home Depot and Lowe's, furniture retailers, and home builders. These companies are going to see pressure on their margins as costs go up and consumer demand potentially slows. Now, let's talk about earnings. This is the week. Earnings season finally and really truly kicks off, and we're getting some good critical reads on the economy. So for today, honestly, it's a light day. We've got Fastenal, ticker symbol FAST, reporting. They're an industrial supplies company, and their expected EPS is 30 cents. Not exactly a market mover, but they're a good bellwether for industrial activity and business spending. So as today is Columbus Day, so the bond market is closed, but the stock market is open. So don't be surprised if volume is super light. So for Tuesday, we have the big show. This is when it gets super real. We're getting earnings from the big 3 banks. JP Morgan Chase, which is the biggest bank in America, Wells Fargo, which is a major retailer and commercial bank, and then Bank of America. So these earnings matter because banks touch every part of the economy. They see consumer spending through credit cards, business confidence through lending, housing market health through mortgages, and investment activity through their trading desk. So what are we listening for? First, we're listening for consumer loan quality. Are people paying their bills? Next, we're looking at credit card spending patterns. Are people still spending or are they pulling back? And then business loan demand. Are companies confident enough to borrow and invest? And then net interest margins. Are they making money on the spread between what they pay to depositors and what they charge borrowers? Wednesday through Friday, more banks and financial companies. Plus, we're start getting some early retail and healthcare names. But Tuesday's bank earnings are the main event. So why does this matter? Remember, we still don't have the September jobs report because of the shutdown. We don't have October inflation data yet. So these bank earnings are one of the real few real-time windows that we have into the health of an economy. So pay attention to what the CEOs say about consumer health and the outlook. That commentary is often more valuable than the numbers themselves. So let's talk about this government shutdown status and its current positioning. So it's week 3 and there is still no deal. So quick update on this. There's no resolution. That's the update. The Senate is supposed to vote tomorrow, which is Tuesday, but expectations are super low. Military families are now missing paychecks as of last week, and that's when real political pressure builds. But so far, neither side is blinking. Markets have pretty much largely ignored the shutdown so far. We actually hit record highs last week despite all of this, but that disconnect cannot last forever. So if the shutdown drags into next week and we start missing the October inflation data too, the Fed's going to have a serious problem. They're supposed to make a rate decision on October 29th, and they might have to do it almost completely blind. So given all this, tariffs tomorrow, big bank earnings, ongoing shutdown, here's what smart money is doing. So first of all, stay defensive. Keep 5 to 10% cash in your portfolio. We're in an environment where a lot of things can go wrong super, super fast. Focus on quality. So companies with strong balance sheets, consistent earnings, and pricing power, they can pass along tariff costs and weather economic uncertainty better than a lot of the highly leveraged companies. Next, watch the banks. So Tuesday's bank earnings will tell us a lot. If they sound confident, that's bullish for the market. If they sound cautious or lower guidance, that's your signal to get more defensive. And honestly, they were already sounding a little cautious even from Q1 and Q2 earnings. And then don't chase. So we're at all-time highs with a ton of uncertainty. This is not the time for FOMO into speculative plays. So this week is going to be critical. Tomorrow's tariffs are real costs that will hit real consumers. Tuesday's bank earnings are going to give us our real first read on economic health in the absence of government data. So stay informed, stay flexible, and don't get caught up in the market euphoria when we're dealing with this much uncertainty. So subscribe to Beat the Bell if you haven't already. We'll be breaking down those bank earnings on Wednesday's episode or Friday's episode, and you don't want to miss it. So make sure you're following us on social media for real-time updates throughout the week. And if you're a federal worker still dealing with the shutdown, the Federal Worker Financial Survival Kit is still available. Click the link in the show notes and share it with anyone who needs it. Remember, the opening bell rings at 9:30, but smart money, we get there early. And this week, being early means being prepared for whatever these bank earnings reveal about the real economy. Have a great Monday. Be strategic, not emotional, and let's build some wealth.